Are you able to hear me? Are you ready to game on, guys? Okay, if you can hear me and you are ready to game on, please type game on in the chat. Okay, I'm super excited to share this very exciting episode in my opinion, because there's so many things that I actually didn't know about it. Then I went on to do research because there's so many hot news around revolving around GameStop, and it's such an interesting stock to look at. On top of that, there's a lot of things to actually learn from this amazing episode. All right, so if you are ready to game on, please type game on. Hello, Aaron, great to see you here. All right, while waiting, I'm just gonna check whether is everything okay from the, because I'm live. Just let me double check. Are you able to hear me? Okay, because I'm just waiting for some of you guys to be here, and I'm also checking on the Next Level All-Star Facebook group. So if you have not joined yet, okay, you can join the Next Level All-Star Facebook group to have a lot more amazing content, be it investing, be it about business building, e-commerce. Okay, there are a lot of things ongoing, like almost every day. Yeah. Okay, yes, I can hear myself. Great. Okay, let's get started. I can see that you guys can hear me as well. Game on. So let's game on and bring the music on. All right. So today, what are we going to talk about? I believe a lot of you already know this stock. Okay. Anybody? Hello, Bello. This is a minion language. Thomas, are you a fan of Despicable Me? Because I love Minion. All right. So today, right, this is really like a very, very interesting stock to look at. It's called GameStop. Okay. Anyone have actually read about the news about GameStop already? Please type GameStop inside the chat. Okay, game on. A lot of you say game on. And this stock, right, it actually like shot up 97% in one single day. Okay, a lot of times, for a stock to pick up, it generally take like 1 month or maybe a few months to even increase 100%. But this GameStop, okay, which is like game on right now, right, 97% just last night. All right, it's like freaking crazy, freaking amazing. But there's so many, a lot of speculations inside this stock right now. So let's learn tonight, is this really a good investment, good investment opportunity for you? And at the end of the day, right, is it possible you can actually use GameStop and use options maybe, to even 10x your return? So this is the episode for today. I hope you're going to find it very, very useful. And yeah, let's learn together and share some insights to see how we can become better investor. But of course, one more time, okay, this is not a buy or sell recommendation. Everything here that we share in Next Level All-Star is really about education. So we really hope that through all these Facebook Live, all this sharing, we can help you to become a better investor, and yeah, let's make more money while investing in a very happy journey. All right. But I'm just very curious as well, before I get started, any one of you have already bought GameStop? Okay, if you have invested in, be it GameStop shares, or maybe you did some options on GameStop, maybe you can type GameStop inside the chat. Then I will know how many of you actually, already started, participating in this frenzy, okay, in a couple of last few days. Okay, because I just want to let you know, this stock, okay, yesterday it increased by more than 100%, right? In the past 1 month, it literally overtook Tesla's increment for the past year. If you know, last year, Tesla actually increased by 700%, right? Tesla took 1 year to increase 700%, and GameStop only took 1 month. All right. So in January, in fact, if you look at in like 6th of Jan, it was still like $18. Okay. And then now, just like 2 weeks down the road, it actually increased to like $147. Okay. That is freaking crazy. Hello, Hey, great to see all of you. Good evening. All right. So, but something very interesting about this stock is it's also hyper volatile, like super volatile. Okay, if you already think Tesla is volatile, right, this is even more crazy, because in one day, okay, this is the day before yesterday. So yesterday when the market opened, it shot up, but okay, the day before yesterday, it lost 50% in one day. And then when yesterday the market opened, it went up 92% in one day. So every single day, if you invest in GameStop, it's like a roller coaster, really like a roller coaster every single night. I believe people who invest in GameStop are like, like they sure like love excitement, because this is super exciting. Okay. Good evening. Hi, good evening. Good to see of you. I can see that none of you have invested in GameStop yet, okay? Because I don't see anyone typing GameStop in the chat. So okay, interesting. So from our sharing tonight, maybe it can give you better idea. Should you be jumping on this frenzy, or should you actually be staying far away from it? All right. So what is GameStop about? Okay, if you are a fan of playing games like Final Fantasy, PS4, PS3, or Nintendo, all this, right? So basically, GameStop, okay, they actually it's a retailer, okay, retailer for different kind of games, retailer for different kind of consoles and everything. So and a lot of things about GameStop, right? It's very brick and mortar. All right. So their e-commerce, their online website, all these are not strong at all. So they are still using a very traditional way of distributing their games. And as a result, also a very traditional way of making money, right? You need to go to the store in order to buy some games from GameStop. And during COVID-19, what happened is lockdown, right? So everything is being locked down, and as a result the traffic also decreased like drastically. So a lot of GameStop, they basically their stores are having no traffic, and they actually suffered a lot during COVID-19 period. So GME, okay, Ziwei, you already invested it already, because that's how you type in the ticker symbol. Yeah, so the GME is the ticker symbol, and David say, okay, you will invest. Okay, interesting. And Zach is asking, can buy put or not? Okay, interesting. Okay, GameStop is subjected to Wall Street bets currently. Yes, Aaron, great. So this is something that we will be sharing tonight, and whether can we buy put or not, we can also go through that later as we share about the story of GameStop first, because I believe many of you, maybe you have heard of GameStop, but you may not fully understand the whole story behind GameStop. And I just want to share the whole story before you want to make a final decision for yourself, whether you want to invest, buy put, or buy call, up to you. All right. But exactly what is the story behind this crazy frenzy? And as we have explained already, right? GameStop is a very traditional business that rely heavily on brick and mortar. So you do need to go to their stores in order to buy any games, right? But the thing is, during COVID-19, people have been like basically stopped traveling, so the e-commerce actually sale like really rocket through the roof, but GameStop didn't get to benefit from it at all. If you look at so many years of data, right? From 2011 onwards, okay, all the way until like now, actually every single year, GameStop make less and less money. Can you see the revenue has been decreasing very consistently over the years? And then the net income, it has actually been decreasing as well. And in these few years, it has been negative. All right, so that means that this company didn't make any money in the past few years, okay? In a very terrible situation. Another thing that you can look at is interest coverage. It's even a negative figure. What does that mean is whatever money that this company earn, it can't even pay back its interest. Okay, so it's really in a very dangerous situation in terms of financially, right? So that's why during November last year, RC Venture, which is also one of the largest shareholder of GameStop, okay, they actually wrote this letter to the board of directors, okay. And what did they say is, as one of the largest shareholder in this company, we felt that GameStop leadership, there's some problem inside, and that's why it couldn't conduct a very strategic approach towards this business. And then very interestingly is they actually highlighted how many like in terms of GameStop, shareholder value has been declining like nearly 68% over the 3 years. And basically it's a very dire situation that as a larger shareholder, they want to pay out to the board of directors. Okay. And something very ironically is, while GameStop has been losing money year on year, losing and their profit becoming like more and more negative year on year. In fact, the gaming industry, what happened, guys? Okay, in the past few years, what happened to gaming industry? Can you let me know what do you think that happened to the gaming sector in the past few years? Did they increase or did they decrease? Okay, in general, actually the gaming sector has been performing more and more, like better and better every single year. So as a shareholder of this company, right, RC Venture, as a shareholder, they said that while the gaming industry was doing so well, okay, exploding, right, year on year, why is GameStop losing money? So they are questioning the board of directors, and that's why they really want to have a change in terms of the business strategy, and they really want GameStop, to revamp itself, in order for, as a shareholder, I can make money, right? Yeah, exactly. Alex said increase, Grace said increase. Okay, this is something very obvious. But on the other hand, GameStop has been losing money all these years, right? So on 11th of January this year, okay, ever since they published that notice to the board of directors requesting, the management to really start looking into it, okay, on 11th of November, finally, okay, GameStop, they actually had a change, okay, a change of its board of directors, all right? So now, instead of the original people management doing the GameStop strategizing everything, right, they actually asked, these RC Ventures, the investors from RC Venture to actually come in to become their board of directors. Okay, basically now they can directly affect the business decision. They are inviting them to become their board of directors to decide what's going to happen to GameStop. And one very very key factor I want to point out is Ryan Cohen, okay, who is basically the boss of RC Venture, the owner of RC Venture, right? He's also the founder of this very, very popular e-commerce website called Chewy.com that actually sells e-commerce, okay, does e-commerce on pet food, all right? And he did so well that this Chewy.com, he actually sold it away to someone else, and he had made a lot of money because he really digitalized it very well. In fact, he even overtook Amazon in terms of selling pet food. So he did have because people see that he has ability to actually digitalize, has ability to actually make it, transform everything into e-commerce. So when he become invited to be like leading the GameStop team, there's a lot of optimism out of sudden. All right, there's so much optimism out of sudden, and that's why the stock, can you see that the shares of GameStop immediately once they make this announcement, okay, were up 8%. All right, so 11th of January was a day that they made it public, and after that, can you see that like the stock has been going up? All right, so Howie say just like Intel, right? Like GameStop is like pretty dead. Okay, so that's why there's a lot of optimism when Ryan Cohen actually joined and start to lead the GameStop team. All right, there's a lot of optimism on that, and that's why the stock price start to pick up. Okay, but something after that, there's the saga is not over yet. The story just started. Okay, despite of the optimism, there are still a lot of critics. There are still a lot of traders, fund managers criticizing that, hey, GameStop is a failing business model. The stock should be plunging to $20. Why? Because of the change of management direction. Why there's a change of management, then the stock price will pick up? It doesn't make sense. So a lot of fund manager, including this Citron research, right? They started to publicize a lot of things on the internet. They also talk to the newspaper about this, and as a result, they say that, hey, GameStop is a very bad business, okay, and we are predicting that it's going to drop to $20. All right, so at that time, okay, GameStop was at $40. If it indeed dropped to $20, that's a 50% drop, okay, but the drop didn't happen. In fact, the stock price surged to $65, and now it's trading above $100 already. All right, so why is such thing happening? If you know that, from a traditional point of view, when you are investing, if it's a great company, you give it time, the stock price will increase. If it's a bad company, you give it time, the stock price will continue to decrease because this business doesn't make money, right? But why, despite the fact that this business has been losing money year on year, suddenly there are a frenzy of people going into purchasing GameStop stocks. In fact, okay, just now one of you said that the Wall Street bets, right? Okay, it's on Reddit, okay, and a lot of people on Reddit and saying that, guys, let's buy GameStop. Okay, and why are they shouting to buy GameStop? And as a result, because so many people suddenly started buying GameStop, okay, the stock price start to surge. Okay, but there is a reason. Okay, there's a reason why GameStop will start to surge. Even though if you think about it, it's a retail investors. How will retail investor even able to change the motion, okay, change the momentum of the stock? Because most of the time you think about it, as a retail investor, the thing that we can manipulate the stock market, it's very, very low. The chance is so low, right? It should be from institution managers, from fund managers that are able to move the market, right? But in this case, it's like opposite. How come these group of retail investors, because of their momentum online, asking people to start buying GameStop, and started to driving GameStop stock shooting through the roof? Why is such a case? All right, so here are just some of the screenshots that I found it from Reddit. Okay, you can see that people started buying shares, okay, about 3,000 shares on GameStop. People also started buying call. Okay, if you learn options before, learn OMI before, you will know the power option, right? So people buy 10 contracts of GameStop options, and then the other person is saying that my mom is asking me why am I crying, because for the first time, this person was so funny, because for the first time I get like 2,000% return just by buying GameStop. Okay, and he didn't invest a lot. In fact, he just like about 400 over units, and that made him like 2,000% return. Really a lot of money in his opinion, and that's why he's crying. It's just a joke. Okay, but yes, okay. Alex know about the story behind why suddenly, because of these retail investor, why did the stock price actually jump up? Okay, it's actually more than there's a story more than that. Okay, in fact, some of them even weren't like really big in terms of the position. Okay, they bought like 50,000 shares of GameStop and then 800 contract of buy call, and that's how this person made like 20,000%. Okay, using option, and using stock is about 400%. Okay, if you know options, there's always an advantage using option. Your ROI will definitely be a lot higher because your initial capital is lower. All right, so this is what people are doing outside, and in fact they are still doing it. Okay, and that's how, if you have been observing the pre-market stock price of GameStop, it has actually shot up to more than $200 already. All right, even though yesterday it closed at 140 plus, pre-market, that means today when the market opened, it will be over $200. So this is the amount of frenzy going on this stock. Okay, but why is it happening? This is something that actually is called short squeeze. All right, and I will continue to explain to you what does short squeeze mean. Some of you probably already know because you have been reading the news. Okay, so for those who are not aware, okay, I'm going to share with you what is short squeeze and why is it such an interesting phenomenon right now, but it's actually in my opinion a very risky thing to do. All right, so traditionally, how does stock price move up? Like I mentioned earlier, if it's let's talk about general market. If it's a good market, that means the economy is doing well, all right, and the employment is very low. As a result, people are spending more money, right? Because they have their jobs at the same time. Their pay is good, and that's why they will spend money. And as a result, company will earn more money. They earn higher profits, so that will drive up the stock market. Okay. On the other hand, when the economy is not doing well, okay, people are having a lot of unemployment, okay, and as a result, because when people get retrenched, they have lesser money to spend, so they spend less, the company earn less. So it's like a spiral downturn. So that's how there's a bear market. So this is traditionally, right? So stock, be it it's a stock market in general or particular company, it's also the same thing. If this company has been doing well, has been making more and more money every single year, that's how there is a lot of positive sentiment towards this stock price will also go up. right? So at the end of the day, it's always about, when it comes to investing, if you look at the very short-term thing, okay, it's always about, emotion. Okay, people's emotion will actually control the market, which is exactly what's happening right now to GameStop. Okay, so in this case, this is something that is out of the norm. Okay, but let me explain to you, like, if you look at the norm, like let's say Microsoft. Okay, Microsoft has been a company, has been performing better and better every single year. In fact, yesterday when they announced the earnings release, right, it was a very good earnings. Okay, they make more money, revenue continue to increase year on year, in fact increased by 14%. All right, so that's how the stock price will also go up over time, right? So in fact, this is one of my core position that I just initiated about 2 weeks ago. Okay, 2 weeks ago I initiated this core position because back then, if you still remember, Microsoft actually, the stock price hasn't been moving much. It was quite uncertain stage, but I thought that it was a very good timing to go in because it's a good support, and I also am very long-term bullish about the Microsoft business model, and that's why I decided to buy a 2 call contract, and that's how I make about 50% already since last night, since about 2 weeks ago. Okay, so this was a last night screenshot just to let you know this is traditionally, all right. But what's happening to GameStop right now, it's totally out of the norm, because we all know that GameStop as a business hasn't been doing well, right? So why would the stock price increase? Okay, is it just because of a few retail investors from Reddit that make it the price shoot up? Okay, actually it's more than that. It's not the case. Okay, the reason why the stock price has been shooting up so crazily, in fact today it's going to shoot up probably even more, is because people, fund managers, they have been shorting it. All right, can you see that this is just since like 2019, just like since last year? But probably the fund managers, those people who really have the ability to move the market, have been shorting it all along. Okay, because they see that, wow, GameStop, the business model is not, revolutionizing with how the e-commerce should go, and they think that this business is so bad, and that's why they keep on shorting it every single month. Can you see that? Since last year, and you can see the number of shares that they shorted, right, get more and more over time, and the dollar volume sold also get more and more. Can you see, from a few 100 million, 200 million, to now last year, end of last year, it was a 1.36 billion dollars. All right, so 好死了，智慧。So what is happening is, as a result of them keep on shorting GameStop, now there is a very interesting phenomenon that they overshot. What do I mean by overshot? That means the amount of, if you see this, float. Float means the amount of shares available in the market for purchase, right? For transacting, for purchase. And the share short was 71.2 million. You only have about 27 million available in the market for you to really do transaction. But these fund managers, these big players, they shorted like 260% over what is available in the market as a float. So what is happening is they overshot. And when it's overshot, actually, the Reddit people, right, when they actually found this opportunity, okay, they're just commoners, like common retail investors like us. When they see this, they were like, so these big boys have been shorting GameStop. Interesting. And now, if you see that it's 260% overshot, that means what does short mean? Just in case people who don't know, okay, that means you short sell your stock. So as I don't need to buy the stock right away. Basically, I feel that, okay, now I'm in an institution investor point of perspective. I say, now I see, wow, GameStop, this business model is really bad. I really think that this price is going to go down. So that's why I will short this stock. So now let's say GameStop is at $20, and I expect the stock price will drop. So I will expect that, let's say the share price will drop to $10. Okay, from $20 to $10. Okay, that is about $10 difference. When I short the stock, that means I will just sell. Okay, I will just actually borrow shares from from the market, from anyone. Okay, borrow some shares. I say I'm going to sell away, let's say 100 stock of GameStop, okay, at $20. When I sell away something, okay, whenever you are a seller, you will definitely receive money, correct? So when you receive money, this is like immediate cash that you can receive. And to them, cash is good, right? They can use the cash to do something else, maybe buy other things, right? So what they wanted is, as long as the share price of GameStop keep dropping, it's good for them, because they actually sold away at $10, sold away at $20. Imagine it really dropped to $10 when they have to eventually buy back the shares. They just need to spend $10. So they sold at $20, they buy at $10. How much do they make? They make $10, right? So that is the difference that they're making. Okay, sometimes they really short a lot. If you see the number of shares, they short in like a few 30,000, like in quantum of millions, right? So when they are selling in terms of millions, shorting the stock in terms of millions, they can also make a lot of money at the initial stage. Okay, but what is happening is, when so many institution players are shorting the market, these short squeeze start to appear, because when other retail investors, they start to realize that, wow, there's so many institution players shorting, so many people shorting this stock, but what is only available, the float is only 27 million. They freaking overshot 260%. What I need to do is, I just go and buy the shares, because I know that the supply is so limited. When institution player, they short it, eventually they definitely have to buy back, because they need to close the position, to make the money, right? So they have to buy back. So when they buy back, the amount is very limited, because they overshot. So a lot of Reddit people, they discover this loophole, and they feel that if I just buy back the shares right now, I just buy the shares outright right now, not only do I reduce the float available in the market, okay, which is making it even more scarce, I just hold it over time. The institution players definitely need to buy back from me at a higher price. All right. So what is happening is, when retail investors start to buy back some of the shares, the share price start to go up a little bit, right? Start to go up and go up. And then when other institution players, they see that, oh man, the stock price is going up. If I don't close my position right now, I will be in a loss. Let's assume, like, if you still remember, $20, right? They sold it at $20. They expect the price to drop, but actually the price didn't drop. In fact, it actually bounced back to more than $20, let's say to $30 right now. Okay, so as the institution players were thinking, wow, my difference now, instead of now I sold it at $20, right? I pocketed the $20, but when I buy it back, I need to buy back at $30. So they are losing $10. And if they don't do it right now, if the stock price continue to move up, what is the loss? Guys, can you see what is the loss? The possibility of the loss can be from $30, it can increase to $50. That means their difference become $30. The $50 can continue to increase, let's say $100. The difference can become $80. So the difference can be infinite. So now they are managing such a big amount of money. They are also very concerned about losing a lot of money, right? So that's why these retail investors have no choice but to buy back the shares at a higher price. And in return, remember, when more people buy a share, the share price will continue to shoot up. And that's how the share price shoot up and up, because the retail the institution players are basically very, very panicking, trying to close the position right now so that they can minimize their loss. All right, so this is exactly what is happening. You can see that on the news, right? The short sellers basically lost $1.6 billion in a single day. Okay, and then another person who tweeted and says that some of the fund managers, okay, those very big hedge fund, they literally wipe out like 2.75 billion, okay, in one day. All right, so this is what is happening right now, and that's why these a lot of people, okay, these fund managers those fund managers who actually shorted GameStop, they are in huge trouble right now because the stock is still overshot. So there is still a lot of possibility that this short squeeze will continue to happen. All right. So Ken was saying that buy put, okay? Ken was saying that buying put on GameStop. But once again, you have to remember that GameStop is still heavily overshotted. If you do buy put, okay, you can actually potentially make a lot of money, but you can also potentially lose up pretty quickly, all right? Because it's a very, very frantic kind of story and ongoing situation right now. So what is the moral of story? What is the moral of the story? What do you guys think? Okay, let me know. Okay, from whatever things that I have explained so far, I really try to explain as clearly as possible. Okay, but if you understand it, okay, please let me know what do you think is the moral of the story. Okay, but for those who are not very familiar with the concept of short selling, short squeeze and all this, it's okay. Okay, as long as you don't go and participate. Okay, that means if you don't have the stocks, you don't go and short sell. Okay, you don't predict that the stock price is going to go down. All right, so this is exactly what a lot of fund managers, a lot of hedge fund people are doing right now. They were thinking that the stock price was going down, and that's why they were greedy. They shorted the market. They shorted the GameStop more than 200% than the amount of floats available in the market. It's really crazy. Okay, so uh, Aaron say the moral of the story is to watch the show. All right, thank you. Right, don't gamble. Nelly say yes, exactly. Don't gamble. Stay away. Don't play game. Terry say don't play game. Yes, correct. Clarence, don't short sell because there is unlimited risk. Okay, just imagine GameStop shoot up to $1,000. Wow, these fund managers, they are in deep shit. Seriously, like if they shoot up to $1,000, which some people in the Reddit they did say, I'm going to hold on to the stock. They say, I'm going to hold on to the stock until it reach to $1,000. Okay, there is a possibility down there. All right, don't play short. Yes. Okay, how do you obtain information on share short? Okay, yeah, maybe let me demonstrate to you. So just now I demonstrated that the percentage of short, right, by GameStop, right now it's about 260%. All this information is actually available in Morningstar. Okay, let me just share a screen on Morningstar so that you can all find this information completely for free. All right, let me remove this. I should stop share and reshare it. Hold on, reshare it. Okay, all right, I'm sharing this. Morningstar. Okay, can you see this? So if you just search Morningstar, GameStop, this is GameStop that you can find, and then usually you can actually navigate between here, right? Can you see there's a short interest? Just click this. All right, you will be able to see how many percent is being overshotted. All right, so this is exactly how I find the information. If you want to compare with like companies, other companies, let's say Microsoft, okay, which is a solid company that I also have option position in. Right? I'm a shareholder owner as well. Okay, can you see that the shorted percentage is only 0.52%? Okay, so overall, you can see that people are generally very bullish on Microsoft, and that's why they also don't want to short this stock because they all know that it's a very stable, very solid company. So from this, you can also roughly tell, what is people's sentiment. Okay, sentiment towards this stock, and apparently for GameStop, it's just overly negative. And if the stock doesn't go bust, in this case, it's not going bust. Okay, that's how the short selling becomes so dangerous. All right, so yeah, exactly. Jared said, right, today when market open, it's going to be over $200, okay, per share. Crazy. So GME, when the musical, Raymond was saying that, when the musical chair stop, maybe it's possible that it's going to return to $14. Okay, and that's why I also feel that it's a very, very speculative trade right now. If any one of you decide to enter GameStop, it's a highly speculative trade. If you really itchy finger want to participate in the fun, in the roller coaster, I will highly recommend don't put a lot of money. All right, just put like a small tiny percentage that you are willing to lose no matter what. All right, so you're willing to lose it. Then if you want to participate in a frenzy, maybe have 10x your return, then use a little bit of money to so-called itchy finger money, right? But majority of portfolio should still be going into very, very solid businesses that you are able to sleep with peace. All right. So, all right. So let me just continue to share. So now I'm just going to share some tips for those who, let's say, you really have itchy finger, right? If you really have itchy finger, what you are able to do so that you can also participate should you decide to. Okay, so a moral story you've shared already, right? Oh, before I share with you some additional itchy finger tips, okay, if you have not followed me, and if you also want to have some daily updates from my own personal investment insights, do join this Telegram channel, okay, t.me/business and invest Chloe, because I do update it very, very frequently about my investment thoughts, about my investment insights. So do join it if you have not. All right, so let's get started for those who are interested in itchy finger trade. All right, so one of the things that you can do, some of you also said it, right, is a hedge with put positions. Okay, that means you can decide to buy a put. Okay, instead of short selling stocks, you should consider buying puts. Why? Because when you buy put, right, the amount that you can lose, it's capped, it's maximum, right? That is the maximum premium that you pay out. That is a maximum loss that you will suffer, right? Should it really go completely against the trades that you wanted it to go, right? So this is a maximum loss, the premium that you pay. Versus when you short sell stocks, your risk is unlimited because the stock price can shot up crazy, like what is GameStop going through right now. So don't ever short sell stocks, because that is the most risky and most really the stupid trades that you can ever do for yourself, right? So instead, if you really want to participate in a frenzy, you can consider buy put. Of course, when it comes to buying put, there are people who also make a few 100% because we are using options, right? So there is one of our students in Hong Kong, another person, in fact, Pete, he is very good at buying put. But most of the time, okay, what our advice is, you use put as a hedge against market volatility in terms of, like, let's say SPY is at all-time high right now. And if you do have a big portfolio, you can consider buying SPY put to protect your position, protect your portfolio. Because when the SPY go down, your portfolio is definitely going to tank as a result, right? But when you buy put, that means you're buying an insurance. So even though the market tank, actually these insurance become activated. So you still make money from buying put, okay? But it's very important you don't anyhow buy, especially don't buy on like solid company like a Microsoft or maybe Apple, because they are very, very solid businesses. Okay, so that's why we do have people who also buy put and ended up losing 50% of the entire portfolio. So don't say I never warned you. If you don't know anything about buy put, just forget about it. Okay, on the other hand, if you learn OMI before and you know what Pete taught you step by step how to hedge against your position, then follow whatever rules that he actually said during the OMI class. Okay, don't anyhow buy. All right, this is very important. What is the date to expiry date? So at the end of the day, also depending on you. Okay, do you want the insurance to be long? Do you want the insurance to be short? So for myself, I actually don't buy put, because I just feel that if I invest in good businesses, over time, the stock market will appreciate, and that's how I grow my portfolio also steadily over time. So in the past, I just want to let you know, in the past, I actually used to have the gambling mindset on buy put, which is very common, because you hedge against the market, you will make a lot of money if the market really tank, okay? But most of the time, do you know what is the chances of market going down? Okay, out of the like so many years, right, the chances 90% of the time the market is going up. So literally you only have 10% chance when you really get it correctly and your buy put really make you money. All right, you only have 10% chance, guys. Okay, versus you just buy great company, buy using call option, you buy call great businesses, your probability of winning is 90%. So that's why I personally don't buy put. So if you really ask me what is the date to expiry date, I really don't have a good advice on that because I actually don't do that. Okay. So another way that if you have itchy finger, okay, you can consider, okay, call options. Okay, so just now, if you really think that GameStop is a company that is going to tank because now it's a crazy frenzy, you can consider to put a little bit of money to buy put. Should the stock price tank, you will also make money from your buy put option, right? But on the other hand, if you think that GameStop still have some way to go up and you also want to supercharge your return using options, you can also consider to buy call. But once again, very, very small percentage. Okay, guys, can you see the importance? Okay, if you really want to have this speculative trade, make sure it's a small percentage. Okay, please type small in the comment if you understand what am I talking about. And if you really want a percentage in terms of how small is the percent, I will advise less than 1%. Okay, really advise less than 1% so that you don't feel the pain of losing a lot of money should the trade really go against you. All right, so how to do call option? If you still remember this screenshot, which is from one of the Reddit guy, he used call option. He also buys stocks. Can you see the difference between the percentage RI? Okay, because that is the power of option if you know how to use it. Okay, Han Hok says smallest. Okay, great. Okay, be very conservative. If you are super conservative, you can even consider not to take part in the trade at all. That's also possible. All right, so that is the power of call option. So if you decide to buy a call, in OMI rules, our rules is you really buy the long call option, right? But actually, I think for this case, it's also a very tricky situation because this situation is like a super hype thing. So maybe you can consider don't need to buy such a super long call because you're going to pay a lot more money if you buy a long call. And you can see if this guy, he actually only bought like a few months. So his expiry date was April, it's going to be April 16 this year. So you can see it's a relatively short contract. Okay, so you can consider a shorter contract if you don't mind losing it. Yeah, just to let you know, this is a very highly speculative trade. All right. So come by Clarence. If you cannot buy S&P 500 buy put with $1,000 capital, then don't buy. That means if your capital is not huge to begin with, you don't need to buy insurance. Okay, your capital, if it's relatively small, use call options and then just invest in stocks or just do call options. Okay, it's good enough. 90% of the time the market is going up. All right. Okay. And then, but will he bought these short calls? Will he be able to sell them? He needs to sell away the contract. I believe should be able to. I believe should be able to. But of course, you need to double check whenever you buy options. So that's why there is certain rules when it comes to buying options. So one more, I just want to compare and contrast. So just now was super crazy, like a 20,000% return, right? This is on super hyper speculative GameStop right now. Okay, so this 20,000% return, in my opinion, it's unsafe because I am not sure will it drop back to like less than 0%. Okay, it's possible because GameStop is super volatile, right? On the other hand, if you're just willing to buy call on great businesses and even by using ETF also can, right? You can also make very good return, like 200%, 2,000%, 1,600%. It's something also very, very doable and very manageable. Okay, but of course you have to make sure you understand what are you doing. And in fact, this is just one of our OMI student. Okay, she basically she say, oh, I'm super happy with my P&L. But once again, you can see that she is not betting on the stock market. She is in fact investing using call option. Using option is just one of the way that she invests in companies. She also buys shares. So that is the difference between the investing mindset and the gambling mindset. So I have to say that people who are doing any participation in the GameStop right now is really from a gambling perspective, all right, they would really want to make cash quick, and that's why they decided to enter, right? In the first place, when the fund managers, when they decide to sell this short this stock, it's also because they want to make money. It's also because of greed, and that's why they overshorted, right? So at the end of the day, it's very important that you don't have the gambling mindset. So for myself, I actually wouldn't participate in this GameStop frenzy, because I really think that if even though I make a lot of money from GameStop, it's not a sustainable way of making money. In my opinion, a sustainable way of making money permanently and substantially, it's more important than making money overnight, right? So that is my philosophy, depending on you. But this episode is really to share with you some investment thoughts, and hope that can prevent maybe some of you making unnecessary mistakes on GameStop. Right, that is truly important. Right, so let's see any more question. The call option price right now, now no less than 1%. He bought these short call, but will he be able to sell them? Or I think this question was answered. When you buy long call, even price drop in short period or reach 50%. Oh, so Elaine is asking, when do you cut loss? Okay, so if it's a great business, actually I really don't see the need of cutting loss, in my opinion. Okay, because I give it time. Great business, over time the stock price will just recover and do even better over time. So I personally don't really cut loss on my call option, because firstly I also bought a long period of time. Okay, unless the call option really reach until super near to the expiry date. If you still remember the OMI rules, is you close before 120 days, right? If by then it's still losing money, then I will just have to close it. But if not, actually in between, I really don't care so much about losing more than 50% on my call option, because in the first place I enter based on it's a good business, fundamentally it's great, and I also enter at good support lah. So if you know technical analysis, I also will enter on support, which is exactly what I did for Microsoft, and that's how when the support get bounced back, I made like more than 50% already in 2 weeks time. All right, so can buy 25 take to expiry call option. Okay, so Nelly, all right, so my question back to you is, what is your mindset when you decide to do this trade? Buy a 25-day to expiry and then sell within a day. What is your mindset? Are you investing, or are you trying to speculate and make quick money? Okay, there's nothing wrong. I have to say that there's nothing wrong trying to make quick money, but how sustainable it is. Are you someone who are willing to stay throughout the night, monitor the market, and then close your position on? Because I'm not this type of person. I really like to sleep early. I usually sleep like 10:30, 11 o'clock. Doze off already. So I don't monitor the market. So I will never do this kind of trade. Once again, if you have tender OMI, stick to your OMI rules. Okay, that's how you are going to prevent yourself from making unnecessary mistake. So Puda is asking, what broker do we use? I personally use Thinkorswim. Okay, Thinkorswim, one of the most, I think, user-friendly, slick, cool, a lot of functions inside. I use Thinkorswim. All right, but if you don't want to use Thinkorswim, interactive broker also can. Whichever platform that you are comfortable with that can do options. But at the end of the day, okay, when you are doing options, make sure you really know what are you doing, because Warren Buffett once said, right, options, it's a super, okay, it's a tool capable of mass destruction as well. So if you don't know what you're doing, then derivative like options can be very dangerous. On the other hand, if you know what are you doing, then this tool is such a powerful weapon that you should learn to master. Right? So Warren Buffett has been using options for many years, and he pocketed millions after millions of dollars just by using options. All right, so thank you. So for those, okay, who are interested to learn about options, who have no idea why, hey, how come using options can make like few 100% to 1,000 to just now the speculative trade that was GameStop was like 20,000%. How did that even happen? In fact, we do have a free workshop for you to go and learn a little bit more about options in more detail. And then at the end of the day, if you're interested in, we also have a 3-day OMI class, but that is a paid class. But just to let you know that so many of our students, when they attended OMI, they really learn so much from it. Okay, I'm not sure many of you watching here right now, have you attended OMI before? How do you find OMI? Because I really find that this is one of the life-changing course that has allowed a lot of our students, our mentees to really literally transform their portfolio and eventually their lifestyle right now. So in my opinion, investing and options are very, very good skill set, life skill that you should learn to master, especially in 2021. If you're really thinking of how to, have better income, how to start to master your wealth, go for this free workshop and see whether is it something that you are interested to build on. Okay, this is a life skill. Are you interested to build on in 2021? All right. Thanks for sharing. I am with you, not participating. Great, Aaron. Great. Yeah, we are just watching on the sideline, eating popcorn. Okay. I think that's good enough. All right. So that's all I have to share today. And I hope you guys enjoy this sharing. And once again, invest safely. And most importantly is, really invest. Don't gamble. All right. If you really have to gamble because of your itchy finger, just a tiny, less than 1% of your portfolio will be advisable. All right. So that's all I have to share. And Elaine is asking, when you getting monthly income, do you cash out? Okay, I actually don't cash out. I don't cash out because I am I still want to compound, right? If you know the power of investing, the more capital that you have, the more capital you grow over time. That's how you can compound it bigger and faster, right? So I am not at the stage that I need to cash out in order to take care of my daily expenses. On the other hand, also depending on your life stage, right? If you are someone who really need consistent passive stream of income, then you can consider cashing out. But if not, if you already have some form of active income, right, I will suggest, instead of cashing out some of your active income, 10%, 15% every single month, put it into your account so that you can grow and compound it, snowball it even faster, right? That is my advice for you. Compound, yes, exactly. All right. So I learned 2-0. Derek, what do you mean? You mean you learn options and investing 2-0. Okay, there's no such thing. Okay, as long as you're willing to get started and you're willing to continue in this journey, you are so much better than people who aren't even willing to get started. So you're already one step ahead. All right, that's great. All right, so that's all I have to share, and hope you guys have a great weekend ahead, and we will see you in the next sharing. Bye bye. See you guys.